the times they are changing. Are the markets prepared to rock and roll with the times, or are they dreaming some other dream?
Is this working? Yes. Well, actually, yeah, so on this, clearly the AI story is clearly now front and center in India, but we need to remember the AI cycle in markets actually began at the beginning of 23, when we had Microsoft investing in OpenAI. So we've now actually had 3 years of what I call the AI capex arms race, which has been led by the hyperscalers who were responding to the competitive threat posed by OpenAI. And in my view, this is the year, my view at the start of this year was this will be the year when the US stock market would start to question whether these hyperscalers are going to get any return on their investment. And we've started that process in the first quarter earnings season. We've started to see the market question whether the hyperscalers are going to earn adequate returns because their business models are gone from asset light to asset heavy. And in my view, that questioning of the AI capex has only just started, and I'm expecting that questioning to increase. And at some point, but not yet the case today, at some point that questioning the markets of the AI capex will lead to a sharp slowdown in the AI capex. But for now, the AI capex is still full steam ahead. The 4 hyperscalers are projected to spend $620 billion this year. And that is why the people who are being paid for the capex, the semiconductor makers' stocks, are doing so well. That's why Taiwan's GDP growth last year is estimated at 12%. So unfortunately for India, so long as this AI capex is surging, India will continue to underperform. But the day that the market realizes that they've overspent and there's a sudden collapse in the capex, then India can start outperforming again. So I'm afraid from an Indian standpoint, India is the reverse AI trade globally. That's the key point to understand here in India. Yeah.
So what's the Indian side of the story, Nilesh bhai? How are we viewing this investment into AI by global firms?
Thank you, Business Standard, for having me over here. The Indian side of AI story is just like our AI summit. Some people found it very attractive, and some people found it very chaotic. When we go to meet our IT services company, they say we have transited from Y2K to application development and infrastructure management. Then we transited to cybersecurity, data analytics, and cloud computing. And we will transit in AI also. When we listen to the global AI companies, they say software is dead. Now cloud.ai will be able to replicate what number of programmers took years to do. When we come back to Indian IT companies, they say, look, programming is just about 1/5 of our work. There is client interaction, there is focus on solution, designing, communicating, and so on and so forth. I think the jury is not yet out. There is fair amount of uncertainty. But one thing is visible. We are unlikely to be a major player in LLM. Our best bet remains in leveraging LLMs to create applications or SLMs which provide solution to the world. Over here, not only the listed large companies, but also the small startups are doing wonderful work. The largest number of people working on AI or leveraging AI is in India, courtesy our 1.44 billion population. So I'll conclude by saying that the AI story of India is still unfolding. We have our opportunity, but we need to play like Arshdeep Singh and Jasprit Bumrah rather than Tilak Verma and you know the names.
One question actually for the both of you, Chris and Nilesh bhai. Are there any similarities or stark differences that you see between how markets and investors are approaching AI as a theme to versus the dot-com era? Because dot-com was also feared, and then it completely transformed the way businesses function and how the markets eventually perceive those times. Chris, if you want to take that first.
Well, I think in the dot-com era, we had this huge boom bust in the internet stocks. But actually, the thesis of the internet boom in the early 2000s on NASDAQ, when it peaked in, I think, 2002, turned out to be correct because the internet economy did change the world. But in the short term, we had this huge excess capacity in fiber optic cables. And the collapse in the value of those fiber optic cables actually made the technology very cheap. And then you had the explosion in e-commerce. So this time around, the equivalent of the fiber optic cables is going to be the data centers. So in due course, we're going to get a massive overinvestment in data centers and collapse in the value. And that will make the application of the technology cheaper. But there's one technical difference between this time and early 2000s is the depreciation and how long the stuff being overinvested will last, because the fiber optic cables had a shelf life of about 20 years, whereas I'm not an expert, but the economic shelf life of these semiconductors is probably maximum 3 or 4 years. And that has implications for the depreciation schedules of this huge capex we're seeing in America.
So as Chris covered the dot-com bubble, let me cover the subprime crisis. Dot-com bubble, from a fundamental point of view, was on a good technology, but bad valuation or bad financials. Subprime crisis in US was on a bad fundamentals and bad financials. AI, if at all, if it is a bubble, is more likely to be dot-com era where fundamentals are in place. It's the financials which we are worried about. And certainly it is unlikely to be subprime crisis of US where both fundamentals and financials were bad.
So since you said that the investment in AI and this all AI concept is still in its very nascent stage in India, have the markets and especially the IT stocks of IT companies overreacted to the development so far? Because they have been battered badly in the past few weeks and months.
I wish I had the answer. It is very, very confusing. And all the tools which we had at our disposal to manage uncertainty is not working at this point of time. Normally, when insiders sell, you know something is wrong. Not even a single IT owner or IT senior employee has liquidated their position. Number two, you try to meet management and understand their body language. Not even one IT sector company body language is predicting this kind of disaster. And I guess the best answer came from Mahesh Bhai today morning. The stock price is net present value of future cash flow, hugely dependent upon terminal growth rate. As terminal growth rate goes from mid-single digit to low single digit or double digit to mid-single digit, the value changes by 30, 40, 50%. While the near-term business is unlikely to be impacted, that's not going to materially alter share prices. What we need to get handle is on the long-term growth rate, and there both business and the fund managers are going wrong. Normally, a good fund manager is one whose call comes right on the market. This time, luck will play an important role to define who the good fund manager will be in future.
But Nilesh bhai, don't you think that with the advent of AI and the tools that it will give the retail investors, let's say in 1 year or 2 years' time, or even 6 months from now, who knows, the role of fund manager will diminish and probably will become irrelevant, because the tools that he or she will have, same or similar set of tools the retail investor will also have. So why would a retail investor need a fund manager to allocate resources for him or her?
So this is the story of Second World War. Germany was advancing on Russia with a new tank called Panzer tank. They had better capacity to throw shells, and they were outside the reach of Russian firepower, and hence they were moving at a fast pace. Russians thought how to solve the problem, and they trained dogs to go below the Panzer tank and blow it up. They trained the dogs, put them onto the battlefield. Unfortunately, they started blowing Russian tank instead of German tank. Much later, they realized that Panzer tanks were running on petrol, Russian tanks were running on diesel, and the dogs were trained to smell diesel, not petrol. I just hope and pray AI will not be able to differentiate between diesel and petrol, and the fund manager's career will be prolonged. But the reality is we are at risk, undoubtedly. Today, the computational power which AI brings on table is unbelievable. We have joined hands with Pascal.ai, the first asset management company in India, to leverage AI for our investment research, to use AI for finding out patterns, doing better analysis of the past. Will I retain my job? I'm not sure, but we are making an attempt. My feeling, and it could be coming from a biased position of being a CEO running fund management company, the future will be neither human nor robots or AI. It will be led by people who can leverage AI to deliver solutions.
So, Chris, is the lack of pure AI plays in India a deterrent for foreign investors, or are they seeing India as a safe haven till the time the world discovers AI and its implications?
Well, no, foreigners have already left the Indian stock market dramatically, actually, because foreigners were extremely overweight India for many years. India was the stock market that worked, particularly in the emerging markets. So we had two triggers for selling of India. First of all, in late 24, the Chinese market bottomed at about 7 times earnings. And so foreigners had to, China's a big part of the emerging market benchmark, so foreigners had to sell India overweight to invest in China from late 24, early 25. But then about the second quarter of last year, we had the DeepSeek moment in January 25, which caused people actually to sell AI stocks in the US and Asia, because the DeepSeek moment basically had the Chinese come up with this very cheap open language model, which, by the way, I think remains highly relevant today. And so we had a sell-off in the AI stocks, but then it became clear the AI capex was continuing to surge because of these US hyperscalers spending all this money. And so then we had a huge rally in the semiconductor memory stocks in Taiwan and Korea. So we had a second wave of selling of India to fund overweights in Taiwan and Korea. Korea is particularly important. I've met emerging market fund managers who have for 20 years been funding Indian overweights by being underweight Korea, as indeed I've been doing for 20 years. And suddenly they've all had to be, right now you've got fund managers who are more overweight Korea than they've ever been in their career. and they're more underweight India than they've ever been in their career. So actually the key thing if you're an emerging market investor this year is can you time exactly when the peak will be in the semiconductor stocks? Because if you can time the peak in TSMC in Taiwan, Samsung Electronics in Korea, and then shift your money to India, when that peak happens, you'll do very well. And that's what everybody's thinking about. But for now, all the evidence is that capex is still surging, and that's why semiconductor stocks in Taiwan and Korea remain well bid. So from a point of view of global equity fund managers, India is the reverse AI trade. And this whole issue of the IT services company, I agree with Nilesh, this is not clear. So there's a division of opinion on IT services companies and how they will be able to adapt to the AI world. It's not like everybody's bearish, but I would say the consensus is bearish, but not everybody. I think the jury is out.
Okay. With the rising algorithmic trading, Nilesh bhai, and high frequency trading, and this is having an impact on overall liquidity as well. So how are retail investors, approaching this volatility? Are they more in sync with whatever is happening, or they want to say, wait out till things are a little more clear?
So retail investors in mutual fund have continued to put their faith in SIP. And while markets are flat almost for last 18 months, the SIP returns are still mid-single digit. It's not zero. So my feeling is that we will continue to get flows from retail investor. Of course, there will be some diversification sometimes into gold, silver, ETF or fund of fund because of the past performance, or into multi-asset allocation fund. But the real challenge for India and for retail is how do they invest their savings? We have delivered a reasonably good performance in mutual fund over the last 30 years. And yet, the share I got from retail investors in principal form is less than the currency in circulation. All of us have currency in our pocket at home, at office. It keeps on depreciating year after year. And yet 40 lakh crore is invested into currency notes, 11% plus of India's GDP. If I remove the mark-to-market appreciation of mutual fund, the share I have got from retail investors after delivering 3 decades of performance is lower than the currency notes at home. आज तक किसी ने घर पे पैसों के झाड़ उगते देखे नहीं हैं, बट लोगों की ख्वाहिश है, उम्मीद है कि करेंसी नोट घर में रखेंगे तो पैसों का झाड़ उग जाएगा.
Okay, Nilesh bhai, if AI is going to, let's say, assume boost productivity across sectors like, let's say, pharma, banking, manufacturing, could this structurally lift India Inc.'s earnings over the next few years and over the next 1 decade or so?
So again, Puneet, I wish I had the answer. On one side, we have visionary like Elon Musk, who is saying that there'll be no need for savings because everything will become free. On the other hand, I believe corporates require consumers. And if they are going to cut cost by removing employees, where will the demand come from? We really don't know the answer. Things will evolve. And we are probably going to go through what's happening in Taiwan. As Chris mentioned, it's the fastest growing major economy with double-digit growth. But entire growth is driven by just one company, TSMC. And whatever they are making, it's not necessarily benefiting average Taiwanese. And which is why Taiwanese government has launched highest program for transferring money to the average Taiwanese citizen. लाडली बहना सिर्फ भारत की कहानी नहीं है, ताइवान में भी चल रही है।
So how prepared is SEBI to regulate this AI-driven autonomous trading systems compared to the global peers?
I think SEBI has done a wonderful job in collecting data and analyzing data. At least as a mutual fund participant today, there was a time when we used to submit information to SEBI as they required for their analysis. Now they have collected the base data, and we don't have to submit any information because they are able to get it on their own. The same thing is working on the high frequency trading. The order which SEBI published on Jane Street is something to read for. How they have minutely analyzed different patterns, whether it's manipulation or not, judiciary will tell. But at least the length and depth in which SEBI has captured that data is truly amazing. And we were sitting with National Stock Exchange, where he made a fantastic observation, which I think not many people know. There was a time when India was besieged with circular trading. You trade among a small group of friends and relatives to push the prices higher. And under SEBI's guidance, NAC picked up the pattern. And now today, when you try to replicate that pattern of circular trading, it gets blocked immediately because those patterns are banned on NSC. If regulator gives direction, some of the patterns of HFT, whether it's manipulation or not, could be banned by NSC.
Chris, India is positioning itself as a major AI hub. Is the stock market and investors truly pricing in the potential that India may have over the next few years, or earnings are, revealing a different kind of a story?
No, I mean,
If you can,
as far as
if you can
equity-
hold the mic a little
No,
closer.
obviously, there'll be some very interesting small caps coming out of India in this area. But in the big picture, the key relevance for investors for India in terms of AI is whether the IT services companies are going to play a positive role enabling corporates to move to these small language models, and that would be a viable role for the IT services companies, or whether they're going to be disrupted. This is the key question. So the brutal reality in terms of India's performance in world markets is India is going to do the best in terms of relative performance in world markets if literally AI story blows up tonight. So that's unfortunately the reality. As I say, I haven't got a strong opinion on the IT services, whether they're going to be disrupted. I think it's very interesting that no shares have been sold. So I think it's wrong to assume it's definitely going to be disrupted. In terms of AI costing every white-collar worker their job, which is currently the fear in markets, in my view, that's going to hit the developed world before it hits the emerging market world. So that's a reason, actually, to be overweight emerging markets. So my view has been since the end of 2024 that the US has made an all-time peak as a percentage of world stock market capitalization at 67%, which is a huge market share. And in terms of who's going to win in AI, the reality as of today is the Chinese are looking more equipped to win on AI than the US, because you need two things in AI. You need to do AI, you need compute, and you need energy. And while the US is ahead of China in compute, it's much less ahead than it was 3 years ago, because the US made a big error in trying to stop the Chinese being able to buy the advanced semiconductors, because that incentivized the Chinese to do it themselves. And on the energy side, China is way ahead of the US, because the Chinese appear to have solved the problem of renewables for the development of battery storage technology. And what I'm hearing in the last 2 years, in China today, solar is as cheap as coal. So the Chinese literally have almost unlimited access to energy, whereas in the US, there's a massive energy bottleneck. But Yeah, but from an Indian stock market standpoint, the key in terms of the big market cap, it's all about whether the IT services are going to be disrupted or not. And on that, I haven't got a strong opinion.
So in a sense, if somebody wants to play the AI theme globally, China is the place to be, scores over US.
Well, in terms of the agreed and fair equity portfolios, where I'm playing the AI theme, yeah, is in China. Because I think the open source model of China is a very practical model because it's going to encourage a surge in practical applications. The Chinese are focused on coming up with cost-effective applications. They're not obsessed with getting to what they call AGI. So you have a lot of different verticals in America trying to achieve AGI by the development of these large language models. Whereas in China, as one person said to me in Beijing last year, if it's 8 out of 10 is good enough for us, they're just looking at coming up with cost-effective real-world applications. And the open source model is fundamentally different from what you've got in the US. So I'm very skeptical right now that you're going to make any money on large language models focused on consumers. I think the AI industry could turn out to be the opposite of the internet economy. The internet economy was about winner takes all. Right now, the AI industry looks more like the airline industry, very capex intensive. So where I think much more interesting is the corporate market, small language models, and that's why people, Anthropic is the interesting company. It's interesting that Infosys announced this tie-up with Anthropic. So if you had a chance to invest in Anthropic or OpenAI today, it's obvious to me that you should be investing in Anthropic, whereas OpenAI faces an existential risk, in my opinion.
So does AI also increase a systemic risk in emerging markets like India during global shocks, especially if algorithms trigger synchronized sell-offs?
Well, actually, no. I think emerging markets look. Synchronized sell-offs where?
Across the global markets triggered by events.
Yeah, well, that's possible, but you see, the real vulnerable area of the US market is the hyperscalers, because that's the part that's overvalued. And they had a business model which was asset light. They were each in their own moat. They were generating huge cash flow. They had global markets. So what's happening in the last 3 years, they're exiting their moats. They're all converging on the same AI area, and they're no longer running asset-light businesses. And the reason they're doing this is because they're responding to the disruptive threat of AI. But not every hyperscaler is going to succeed. Right now, if I was going to own one hyperscaler stock, it would be Alphabet. Because Alphabet, by bringing up this Gemini product, looks like it's averted the risk of disruption of their search model. And right now, based on the latest traffic, Gemini is taking market share from OpenAI. That's the current trend. Yeah.
So, looking ahead, will AI be the next big, long structural theme driving global capital allocation? And can India get a fair share of that capital?
Undoubtedly, many fiber optic companies failed. Many startup targeting eyeballs failed. But internet continued to redefine the way humans lived. Same thing will happen in AI. As Chris mentioned, some of the hyperscalers' investment may not yield desired result and dent their market cap. But undoubtedly, AI is going to change the way we live. In India's case, we have two paths open. One, encourage our companies to develop SLMs and apps using LLMs with Infosys, Anthropic kind of tie-ups, and provide cheaper, better, faster solutions to the world. But the second option also is necessary, and this will require going above AI. For example, India today exports about $8 to $9 billion of aquaculture. We are blessed by nature to be the largest aquaculture producer in the world. Shrimps require temperate water, not too hot, not too cold. They require shallow seashore. Both of us are in plenty in India. Today, with the US tariff going down and Indo-EU FTA again reducing tariffs, India could emerge as a global leader in aquaculture. This $8 to $9 billion of exports could go to $30 billion over next couple of years. And why will that happen? Not only nature is blessed, but economy is also working. The incremental return on equity on aquaculture is ranging at current prices about 100%. A Gujarati vegetarian farmer is also getting into aquaculture because dhando is dhando. That is what we have to do at the bottom of pyramid, on aquaculture, on textiles, on soft toys, and on so many other things. And then we have to take a game one notch above. SpaceX will debut at $1.5 trillion market cap as per the market gossips. There is a startup whom I met very recently. They are launching satellites in low orbit. SpaceX can launch up to Mars, so it's a apple to orange comparison. But the price at which this startup is launching satellites in low orbit is the cheapest in the world. It is launched using aviation turbine fuel. No other country and company in the world is doing that. It is launched from mobile launch pads. Again, a flexibility which other countries don't enjoy. SpaceX caught the fuel tank falling, and it was engineering miracle. This company is going to make an attempt to catch a fuel tank falling from the sky. They could fail, but hopefully 1.44 billion people will wish for their success. On two things, it is better than SpaceX. In a rocket, there are fuel tanks and the vehicle carrying satellites. The vehicle carrying satellites gets dumped and gets destroyed on re-entering environment. This company is creating models whereby the vehicle itself becomes satellite, so nothing is wasted in the rocket. Yesterday, they announced that at the same time, they fired 3 rockets. I'm not an engineer, so I don't understand. I'll have to study and research. But apparently, this is also a big achievement. There are so many entrepreneurs like Srinath of Agnikul, which are audacious. They are venturing into cutting-edge technology, deep tech. And if as a country we can support that ecosystem, we will be able to build next SpaceX. Today, we may say Srinath is Chota Elon Musk, but if we support our Srinath, one day we will say Elon Musk is Bada Srinath.
One quick question, rapid fire for you both, Chris and Nilesh bhai. Which is a bigger threat for the markets over the next 6 months, 12 months, 18 months? Is how the AI evolves and disrupts businesses and markets, or how US trade policy evolves and disrupts businesses and trade stock markets?
Oh, no, look, if it's really true, these predictions on white-collar employment, which I'm agnostic about, but you're having more and more people taking these predictions of white-collar employment in the developed world seriously, then clearly, if that really happened, you would have huge problems in consumer lending portfolios in the Western world. So to me, that's the real issue, not the tariffs. So tariffs are relevant for the midterm elections. And obviously, if you had if the midterm elections were held today, it looks like the Republicans would lose in a landslide. So there will be more focus on midterm elections going into November. But the real issue is this question of white-collar employment. And the bond market in the US is beginning to rally. So we need to watch that, because if the bond market really starts rallying here, it's going to reinforce expectations that this white-collar employment issue is real in the near term, which I would define as in the next 12 months. But as I say, the jobs are going to be lost in the developed world before they're lost in the emerging market world.
So Puneet bhai, I'll try to answer in Bollywood style. One, Trump घायल है, इसीलिए घातक है. And second, Don को समझना मुश्किल ही नहीं, नामुमकिन भी है.
Thank you, Chris and Nilesh. We just have time for one audience question. Anyone? This gentleman. Please introduce yourself and the question, please. Can I speak? You can hear me, right? Yeah, if you can pass on the mic, please.
Thanks, Nilesh. Thanks, Chris. So the question is, as this AI thing is changing every day, you get new models, you get new applications every day. I feel, as a software engineer, I always wonder that if I'm missing out things. So how do you assess if there's real value in a new model or a new application, or it's just a buzz thing? Like, so how are you evaluating if it's something good, or if it's just a new thing that's coming up?
So one, you'll have to keep your eyes and ears open. Like when we took Pascal.ai, we had certain expectations and they had certain delivery. But once we put that into real use, we realized that there were shortcomings. Now, one option is to junk it, but that's not going to solve our problem. The second option is to work together to make that model better. And things are evolving. What was yesterday not possible, today it is possible. What is a challenge today may not remain a challenge tomorrow. So when you are picking up any model, any app, you'll have to work with the developer to customize it, to modify it so that over a period of time it continues to improve.
Well, thank you, Nilesh bhai. Thank you, Chris, for a wonderful session.